Good evening. Hello, my friend. How are you? Okay. Just give me a sec.
¿Me oyes ahora?
Hold on. I have a small technical. Okay, just one second. Ok. Ahora sí te escucho. ¿Escuchas?
Ahora. Sí, sí, ¿tú?
Muy bien, papá.
Excelente.
Vamos a empezar de una vez. We're going to do it in English.
Okay.
For those of you that speak Spanish, you know, let me know if you would like me to do some separate webinars in Spanish. Ruben, I can hear a lot of noise in the background. Can you keep it mute? And then when you're ready to, if you have a question for me, go ahead and unmute the mic when it's ready, when you're ready.
Okay.
Outstanding. Okay, my friends. So we're going to start another week. Today it is August the 20th. And as you can see, we have a very interesting week mainly because this week, and actually let me pull this up real quick. We are going to have, when it comes to news releases, we should have a very quiet week, which a quiet week can be a very productive week for some of us who don't like to be in the roller coaster of trading news. And when you have quiet weeks, there is a group of us that tend to be actually more active. And and I understand there are others who actually are looking forward for lots of news, but not us. We like to take very strong positions in our trade, and we do appreciate the liquidity that sometimes the news releases can produce. However, we already have a market that is unstable enough to create more risk by trading news. So we just stay out of it. And just by looking at the week, as you can see here, today is Monday. We're just waiting on a monetary policy from the Australian dollar, which is been performing very strongly for the last couple of days. Well, today is Monday, since last week. Let me see something here. I thought I had it out. Let me see. Okay. This is the Australian index. And it's taking a little longer to load my charts. I guess this because I'm streaming live. But this is Friday. And as you can see, if you were part of a training we did last week in regards to the 52 weeks supports and resistance, this 52-week high and 52-week lows, you want to go ahead and watch that video if you were not there, because I explained the importance of having these 52 weeks highs and lows on your charts to help you trade. Every time price touch the 52-week high, as you can see here, there is a double top. Immediately price reacts, going against that 52-week high in this case. And so price went down and it reached a 52-week low, and then it went back up. I'm not going to explain in details on this video the references on the actual Ichimoku system. As you can see, we have the Ichimoku on the charts, and we also have, which I'm going to put in a minute, the volume profile, which are the two indicators we use to find super strong entries. The volume profile is it's part of a premium package on TradingView, so you have to have a premium account to get it. But I can tell you one thing: it is worth it, every penny of it, and you'll see it in a minute why. Anyways, this is the Australian index, and if we go back to the news, we are expecting to have the meeting for the minutes of the monetary policy of the Australia Reserve Bank. Okay, so and that's going to be tonight at 9:30. So we should see that pair moving, or that index, or any pair related to the Australian dollar moving in a very interesting way. Okay, so in regards to Tuesday, we have New Zealand news tomorrow night. Then on Wednesday, we have the Canadian dollar at 8:30 in the morning. Then, just a couple of news on the US dollar for Wednesday, nothing on Thursday. And then Friday, we finish the day with a couple of more news. So as you can see, I only keep on my view the high impact news. I'm not interested, and I don't really care about medium impact or low impact. As you can see, there is a lot of stuff on the medium, but they do move the market, but not to the point where it keeps me out of it. I don't mind trading those or being in the market looking at my charts while the price is being affected by a medium impact news release. So I only keep the high impacts on my view and try to stay out of it while these news releases are in effect. So another thing that is happening today or this week, or if for the same matter for this whole month, we are in a season that a lot of traders, institutional traders, and large traders are on vacation, and they're not taking lots of trades, and this happens every year, and so we know that now is the time for taking conservative approach to your trading, because liquidity is not as strong as is going to be probably starting the mid next month all the way to the end of the year, and then mid January all the way to the end of spring. But for now, we have some very interesting pairs to look, and we're going to spend some time on based on the Facebook group. We have some people that requested a couple of pairs to examine, and we also have the euro dollar, which in my opinion is positioning itself for continuation to the downside on a substantial drop. So let's start with the Europe, the British pound, and the Japanese yen. And I have two monitors, so I'm kind of looking to the side to be able to see what we have. But over here, we can see, hold on, I just got a notification. Okay. We can see the British pound on a daily chart. By the way, we're only going to focus on daily and 4 hour. So on the daily chart, on the volume profile, we see that the POC, or the point of control, which is this red line, it's right at 146, we'll probably can say 25. 146.25, 6.25 is where most of the took place back at the beginning of August before this breakout candle that took this pair on a complete dive. Now, if you know a little bit of Ichimoku, if you don't know, go ahead and send me a message. I am planning on scheduling a training on Ichimoku alone, and I'll be happy to have you on the training, how to interpret Ichimoku and the various techniques that you can use to understand how the Ichimoku system works. But in short, you can see that price dropped in, this green line that I set it up in green is what's called the Tikkensen. And Tikkensen, as you can see coming down, it comes close to price, dictating the movement of the actual price of the pair you're looking at. Now, the blue line, and to keep it in simple terms, is what we call Kijinsen. And Kijinsen, it's help us understand when the market is out of equilibrium, okay? And every time we see a flat Kijinsen, we know, hold on, I'm looking at a message somebody's sending me. Just give me a second. Okay, so that helps us understand where the market most likely will gravitate towards. Okay, so for that reason, as we're looking over here on the daily chart, price came down and created a 52-week low. And what happens most of the time when the 52 weeks low is reached, or when an extension like this happen, typically price goes into a range. You can see this better on a 4-hour chart. And as you can see here, this is, by the way, the strategies you're looking at is what we follow and train and and teach on our POC Trading Camp Premium, and we go into details how this works. But we enclosed this range on the 4-hour chart on a box, and as you can see, price have just stayed inside the box on the 4-hour chart. There are various ways to trade the 4-hour charts inside a box. Right now, we are only looking at the POC, the point of control, the red line. It's right here, 141.03. And as you can tell by the candles, how the candles move, they all bounce or change direction right around the POC. Okay, and particularly here, you see how it dropped and it came back and it dropped again. So there is not much pressure, as you can see, to the downside. It's coming down to this level. It's not even reaching the bottom of this box. When it comes to the closing price, looking at it from a line chart, if we put it over here, you can see that price, it looks like it's coming to a point where it may not even drop all the way here, but it might just go up. And if it goes up, we are kind of looking at a 50% Fibonacci retracement from this point, which if you look on the daily, look where my Kijinsen is. It is way higher from the 50% Fibonacci retracement, but by the inclination, my prediction is that what's going to happen is that this may come somewhere to here, and then somewhere around here, it will go flat again. And in that whole process, price will come until it meets your blue line, and automatically gives you you got to wait at that point for a signal whether the price breaks above our Kijinsen line or a blue line, or it bounces at that point. And if it does bounce, then you look at probably, actually, let me not use this one. If it does bounce, this is what it will happen, in my opinion. Okay, from here to here. So if it bounces somewhere around here, you can expect a downside movement creating a new 52 weeks low. If it doesn't bounce, because the British pound has been dropping for several months, and if for any reason the British pound decide to somewhere around here just go back up in price, then we are probably a month away from that to happen, or at least a couple of weeks. Remember, these are daily candles, so each one of these candles will take about a day for it to complete its complete to complete his complete to complete his complete run. You understand what I'm saying? Anyways, that is what I am thinking in regards to the British pound and the Japanese yen, is to look on the 4-hour chart, look on a breakout somewhere around, and as you can see, the Kumo cloud from the Ichimoku, both are flat, which is what's giving us this flat movement. The cloud on Ichimoku kind of gives you an idea where some resistance and supports, invisible resistance and support, are located, that can give you a projection of the future of the currency. And there is a possibility that it will break into the cloud to then at some point break out of the cloud. But again, we are away from that move, and probably several days for that to happen. Looking at the volume profile, you can see that we are accumulating more sales orders on this range. They're kind of like on a 50-50 range. And you can see that, if price was to drop from here, then we have more sellers. So price will drop to the bottom of the box. But check on this area. There are hardly any orders here around the 140. So this tells me, and yes, this is volume profile from TradingView, and it's not the complete volume of the Forex market, but it gives you a very good insight on where buyers and sellers are locating their limit orders, because TradingView pulls all their data from 4 major brokers. And so, and I'm talking about real large brokers like Forex.com, Oanda, and I don't remember who are the other two. So they're pulling their data from those brokers, and so it can give us a very good idea. Again, I don't trade only with volume profile, but I use all the different other tools. But combining volume profile with Ichimoku, looking at where my Kijinsen line is, the numbers of orders here. I mean, it's called confluence. So I begin to draw my conclusions that I know that there are not that many orders on this price range. So if price comes here, being so far away from this line, it's going to be really hard for price to break. Now, This was a complete story if this candle was, let's say, here. You see it right over here. I'm just gonna paint this because I want you to get the picture. Let's just pretend that this candle was right here, right now. And I see that there are hardly any orders right here. I know if price breaks this box close to the blue line, I know, and then typically, if that's the case, I'm looking for Dickinson to be above price. So if I have Dickinson and Kijinson above the price, and I see that we're about to enter an area with very small amount of orders, I know price is just gonna drop. Every time you see this small amount of orders, look at the size of the candle. Okay, price typically drops. So, but that's not the case here. We don't see that many orders. However, we see that even though Kijinsen is pointing down, it's inclining down, it's still way too far from price. And it does take some time for Kijinsen to catch up with price. So what I think is going to happen is, I already showed you what's going to happen with Kijinsen. I think price is going to come and it's going to position itself underneath the candle, and then it's going to help me push that price up until at least a 50% retracement from this extension. So that's enough for the British Japanese gem. Ruben, do you have any questions in regards to this?
No, everything is pretty clear. I think what is happening, I think is gonna do the same. Like as a wave going back, right?
All right. Yes, sir. Awesome. Ruben, just a question. Were you, I know you've been trading for some years. Were you exposed to all of these, my approach of the POC? Is this something completely new, or you kind of had a system similar to this?
And no, this is completely different of what I used to do. Totally different.
Do you find it easier or the same, or do you see, or you can see the advantage that you can have as a trader by knowing the POC?
Yes, I think it's a very good advantage because I'm looking in another way the market that and I'm not used to it. But I think it's a pretty understanding and really good because you can see also the future what is going to happen. So I really like that.
Awesome. Awesome. And as you can see, we don't have any other indicators that like MACDs or RSIs or stochastics. I mean, I do use those in some strategies, some advanced strategies, especially the MACD. However, what we have on the screen is actually more than enough to make very good predictions on swing trades. May not These setups may not help you to find entries for scalping because we are on a daily chart, and you may want to be on a 15 to 30-minute chart to do that. But on these setups for daily and 4 hours, it is just fantastic for swing trades and being able to set up your limit orders and forget about it. Let the market triggers you in and ride the wave until it's over. So next, let's do the the US dollar and the Japanese yen. Okay, and this one is in a very interesting situation right now that I haven't, previous to this video, I haven't reviewed until just now. I'm looking at it with you. And by the way, uh, this is another advantage of the POC system. I can look at the chart, and in a few minutes, I can have an idea of what it's doing. And once you train your eyes to look for these things, the minute you see it, you know where you are and you know what the market is doing. And so just by looking at this, coming closer, we can see that the US dollar versus the Japanese yen, made a what we call in the Ichimoku system a TK crossover here, which is a very good signal to initiate an entry, whether you're going long or short. In this case, we can see how it dropped. And after it made that TK crossover around this level, I also use fractals. Again, I don't want to make this complicated, but fractals are key in my trading strategies. And if you want to learn about it, just register on the Facebook group and we can talk some more. But fractals, Ichimoku, and volume profile, guys, you have it all right there. Um, Look at the inclination of the blue line. Okay, Kijinsen, it's pointing down. So it's telling me that momentum is to the downside. Price is pointing down. This kind of peach color here, it's called Chiku span. And Chiku span is also outside the price, okay, on the bottom. That's another signal. We also did a Kumo breakout, and I'm telling you all of these things, and I'm trying not to get over technical or over complicated, but all of it tells me in a glance that price is going to drop. Now, how far down, it really depends on the market structure and where my support and resistance uh, are going to be located. But by judging by the volume profile here, you can see that we are right at 109.78. And I can tell you that we should keep coming down. By the way, the left, every time you see the left, you're going to see where possible, in this case, support are going to be. So this flat cloud combines with this flat Kijinsen makes me believe that market this Chiku span is going to hit this level, which is the 109.80, and it's going to bounce. And price will correct, will retrace just a little bit. At this point, look where we have our blue line, look where price is. Now, if it breaks this line, we are going to expect not too much volume and a very equal amount of sellers and buyers around this area. The cloud just got what we call a Kumo twist. And the Kumo twist is indicating to me with this inclination that there is indeed a very strong momentum to the downside. Now let's look. We don't take the entries on the daily, by the way. We take the entries on the 4-hour. And as a premium member, I'll teach you how to take the entries with minimum drawback on the 15-minute chart. But looking at the 4-hour, this is beautiful because this is, look at the small amount of orders and look how price is dropping. We don't have that many orders here. And just so you get an understanding why this happens, if there is an institutional player here, the market maker in this area, there is almost no resistance for the market maker to drive the price down. There are not any, nobody's buying in this area. Look at it, guys. This is amazing. And again, I'm sure that as you see this, you can understand why our camp is called point of control. Because the point of control trading is understanding where the institutional players are. And with all of the tools that we use and techniques, you can spot where the smart money is so you can have solid entries where the smart money is. Look, it keeps dropping, inclination, inclination. Chico span is outside. There are almost no orders here. This was a very strong signal from here down. If we would have been on this entry, we could have been at 49 pips already in just 2 hours. I mean, in just 2 4-hour sessions. And in my opinion, I think it will continue to drop to probably somewhere around this level at the 109.60. By the way, if you notice how the volume profile changes in size, is because the volume profile captured where the orders are in what's on the screen. So if I go farther out, it's going to give me the orders that were already here. So it's not going to be necessarily as clear as when you come in closer, and now it's giving you the orders placed on volume by price on what's on the what's on the screen. So that's why you see that it decreases and increases as you zoom in or zoom out. So we already know, guys, if you want to scalp this trade, the US JPY, as soon as Kijisen goes into a flat line, which it will do, eventually it will do, because the market, look what happens. It always goes down and it gets flat, down and it gets flat. As soon as it gets flat, you're going to see the range, and it always happens kind of the same. And then you can do a counter trade on a lower time frame to scalp the market on the buy side. Now, if you are going down on a short, I wouldn't recommend you to buy anything unless you know what you're doing, because that's where people get trapped and lose money. The counter trend is not easy. It takes skill and it takes a lot of time to measure the momentum of the market and when the momentum changes so you can get out on time. So my recommendation, if you see all these, look at all these fractals. You know, all of these bear fractals are breaking down. So if you see everything going down, why are you going to go up? Unless you know what you're doing, don't go up, don't buy. Wait for a signal to only sell. So if you're asking me, what should we do with the US JPY? Well, right here, it broke a fractal and it keeps going down. It's going to pull back up somewhere to the fractal again, and then it's going to keep going down. If you don't feel comfortable counter trading, then just wait for the pullback. And as soon as it gets around this level, then you're going to enter your short sell again. But judging for where the POC is and how we just broke this level right here, it will be interesting to see how this candle closes, where the blue line is going to be at the end of the close, and then consider whether it's going to go back up right away or it's going to keep going down based on the price action. One thing for the new traders out there, you don't want to chase price. So just because you see it moving quickly, like it was just now, a rookie mistake is that you see it moving quickly and you jump in right away. You want to wait until the candle closes. So if you're in a 4-hour chart, you want to wait until this candle closes. Again, unless you know what you're doing and you're scalping on a lower time frame on a 15-minute, that's a different story. But for what we're talking today, we are only focusing on daily and 4 hours. So you want to wait for this candle to close, see what the price action is telling you, and based on that, make your analysis for an entry. All right, moving on. European, Japanese, the Japanese yen, okay? We made this call, and actually, let me show you this. Last week on our Facebook group, we, let me show you, we called this was last week, guys, and this is using the techniques I'm showing you and some other techniques that don't want to complicate it more, but this was last week, the euro yen. If you play it forward, look how it's exactly as it was predicted. So I went in long right here, and I took my profit here, and then I did went long again on this candle, and as you can see, the next candle created a pin bar that put me in the red for a few hours last week, but I knew that my price was going up, so I held on the analysis for, hold on, the analysis for the bounce on this support. You can see the orders. I knew by looking over here that there were not that many orders, very, very, very small orders. And right on where my stop loss area is, I knew that there were more sellers than buyers. That's why I had this nice pin bar. So it went into the red and almost got to the point where I was going to lose my profit that I made last Sunday to Monday of over about $700 I made on this move. But I held on it, and now we're back in the blue. And as you can see, price have stayed in this box or this area. And judging by the numbers of orders, check it out on the right. Do we see what? More sells or buy orders? We see more buy orders on this section. And here, not that many orders, but this is what we have, the movement that we have. So I know if we go back here, okay, now this is looking at it from a different perspective. And I might be confusing you a little bit because now I have my volume profile, and this is more advanced reading that I teach. Today I'm giving you a bonus, but let me keep it like this. I have now the volume profile on the session. And this helps me understand where the orders are per candle or per session, okay? The one we saw earlier, it's the whole view of the market on a daily. Now here, I'm looking at the whole view on this session. And as the market breaks, opens another session. Another thing happens with this view, these red lines are POCs, points of controls. And these POCs are giving me an idea where the control is from the large traders. And I know that it's going to be hard for the candle to break those POCs. So check it out. Again, that's why we call POC Trading Camp, because this is what we specialize on trading with a high skill of entry, level of entry, by finding POCs and very strong areas where the sellers and buyers are. So I can tell you by judging at the cloud from the Ichimoku, by looking at my POC on this session, look at how this session was 1, 2, 3, 4, 5, 6 candles, and it puts it in a box for me. And then right here, it's initiating another session with another POC. So by judging at the candle here, if I wanted to scalp, I know this thing is going to come down from here down to here. However, look at my inclination. I will not enter on a short because the momentum is to go up. Price is going up, momentum is going up, and this cloud, I think, is going to break through. Price is going to break through the cloud, and it's going to go all the way up here to the next POC level. And I'm not going to confuse you with all these numbers. Let me get them out. Oh, it's okay. Not going to talk about them right now, but if you see this right here, price should reach over here. By that point, we're going to be dealing with a flat cloud, and this flat cloud will be a very strong resistant. Price probably will bounce, and then it will be a breakout, which on a daily, check it out. What did I just say about the blue line? Look where Kijinsen is. This was our entry right at the 52-week. We entered last week here, around here, and look how price is moving up. Okay, so by the end of tomorrow, the next candle, price will probably be underneath the candle somewhere here, and it's going to create what we call a C clamp, and it's going to begin to squeeze the gravity between the blue line and the green line, making it closer to a point where we'll have to then examine, once we are around this level, whether price will continue to go down or will indeed be a reversal to the upside. I think that we are going to get here and then it's going to drop again. So my long bias, which is only a long bias until we reach somewhere around 127.50 or 60. Once we reach that level right here, somewhere around here, I can actually put it right there. Once we reach this level, that's why I set up my target not all the way up. My take profit, my second take profit, it's somewhere around here. Because here, anything can happen. It can break and continue on, but you have a very thick cloud, so it's going to take some time to break through. So I'm not interested in holding my trade anymore. Or if this Kijinsen might be down somewhere around here at that point, and if that's the case inside a C clamp, then price will bounce and drop again. Okay, if it drops, then you know we're going to have a 52-week low, and that will be another opportunity to short the market somewhere around this level, because it's, and then we know our next target will be again the 52-week low to see if it breaks through on the third time. This is the first, this is the second. If we go back, we have another one here. Nope, that was it. From the coming from the top, first, second, we wait until it gets here and see if it drops down again. All right, guys, so it's 8:48. Let me move on to the next one, which I think we're already almost done for tonight. And this is the euro dollar, okay? And for the euro dollar, I said earlier that we might be looking for a good 500 pips move. And let me get my candle, my charts naked first, so I can explain to you why I said that. And then we're going to put the indicators back again. So look at this, guys. Let's start with the weekly. And I want to give you a small hint. Okay, we're going to look at this trade looking from the weekly. What do we see? What's the first thing we see? So we see that we reached the 52-week high, and it went into this range that finished on, when is this? On April. Then we see the drop, right? But as we see the drop, we went into a range. Now, can you see something interesting? I don't know if you see a range, but this range looks very similar to that range. Okay, so we have that, have this, and make it smaller. So far, this one is a little bit smaller. Okay, and this one like this. Now, what is the stronger, the lower time frame or the higher time frame? Well, we all know the higher time frame will indicate the stronger sense of the actual trend. If you want to know where the trend is really moving, you want to look at the higher time frames, and that will give you an idea. So by looking at this, I see the first thing that brings my attention is that this range is very similar to this range. Now, if I take this out and we put a box in it, let's just put a box right there. Okay, and we see how price broke there. Let me get another box, put it right here. Right there. Hold on. Again, this is weekly, guys. I want you to get a good idea of what we are looking at. The move from this candle all the way to this bottom of the box is 768. The move, 768 pips. Let's say you did the smart thing, right? We don't jump into the movement and you did not catch this candle drop. Because this is the weekly and you like to trade the daily or below, so you didn't pay attention to the weekly, so you missed this thing. But all of a sudden, you came to the POC and you heard about going into the weekly, and all of a sudden you see that this next candle open up here, and you catch this down, giving you 591 pips in 1, 2, 3, 4. That's a month. Okay, so imagine setting up your order to enter the market. When this candle went up, you already know you broke the box. Then it came back up as price was rejecting this level, was rejected by this level. Opens the next candle outside the box. You already have your sell order here until you see this indecision candle and you say to yourself, well, let me get out to lock my profit. So it took you a month and you made 500 pips minimum in 1 month. Okay, one trade, only one trade, $500. I mean, 500 pips. Now, there is a principle that if you're an advanced trader, you already know this. And typically, every time we have a move like this, typically price goes into the range and it creates a similar move after the range is broken. Okay? And it's safe to say, or to um, it is safe to, I forgot the word. As you can tell by my accent, my first language is really Spanish. But then sometimes I get confused between English and Spanish. But judging by the extension of this impulse move that brought the the euro US dollar into a downtrend here, it will be safe to assume, that was the word I was looking for. It will be safe to assume that now that price broke here, it could possibly drop down. Now, I know for you guys looking at the price action that we can see here, this nice pin bar, it's almost like a hammer, and this indicates a trend reversal. So just by the price action on this candle on a week, this was last week, we can say that, well, price did reject it at this 52-week low. And we can, based on the 52 weeks projections, we can say, well, this price should be going back up. And it could. That's why I'm not taking a short position yet. But my bias is that we might be waiting for price to react in this level. And if this candle fails to, if the next candle fails to open inside the box, projecting to go up, but it opens below the box with a price action to the bottom, you can enter your short orders and take a several, maybe a month, 800 pips. That will be stretching it. I will probably, you know me, I like to log my profit. I don't care if it's going to go for 800 pips and I get 500 of it, I'm happy. Okay? So I will probably look for the next area of support, and that will probably be somewhere here. So that's 550 pips. And again, I'm looking at the weekly, but check this out. We're gonna look for short entry. And why these type of trades are very, very good. Your risk ratio at 2%, you wanna set this up. If you enter this trade, probably around here, a little bit past, a little bit higher or past the resisting area here, in case a market maker try to get you to stop out, to get into a stop loss. And we said we'll go down all the way here, somewhere around here. Look at that risk or win-loss ratio. Now, that's the type of trades that you want to have. And in my premium group, I'll teach how to set up multiple accounts so you can take multiple trades. In other words, this same trade has multiple approaches. If you have multiple accounts, you can set different approaches based on the analysis you're doing. Again, we can get complicated by doing that, but it is not my intention to make this complicated. So after we go from the weekly, we are going to go now into the daily. And you can see again the same pattern. This is the first impulsive wave that came down here. It went into a range. And then we have what it, for a minute, we could have said there is the second wave, but it got rejected on the 52-week low. And then after it got rejected, price went up. But now we're dealing, and let me show you this. This is what we call the supply and demand area. I guess I'm gonna do it with this. Okay, let me just do this right here. Okay. This is supply. In this case, this is the supplied area. Okay. If we're going up, then supply, for those of you who are new, supply is where the sellers are going to be located, and demand is where the buyers are going to be located. So if this breaks this box and the candle opens up somewhere around here, then price perhaps might go up. And if that's the case, I will have to wait for price action to play a role around this area and see if price going to break over there. However, by the judging of the weekly chart, I see that very unlikely. But again, this is Forex and anything can happen. But judging by this dropped consolidation or range, I'm expecting another drop of equal amount of strength to the downside, which it can give us about 500 pips. If we go back again into the daily, we see where our supplied area is, and look at price action already. Price action is already reacting to the area. And most likely this candle, the next candle will probably open here and drop again. It may go into a small range and then drops again a couple of days. Let's see what the 4-hour says. Look at it. Complete rejection of the area. This candle. But the second candle opened inside our supplied area. So we may perhaps have this price to drop. Now, one thing and another reason why we want to have trading view, because you can do this. And I already have it here. No, I don't. So you put this and you can type in TVC DXY. Okay, and now I'm going to put the dollar index on the chart. And now I can trade with correlation. Look at this. This is the dollar index. And just to make things easier, let's make the dollar index with a line. Oh, that's ugly. I like that. Okay, that's better. And you can see the correlation, in this case, a negative correlation, because when the euro goes up, that means the dollar is going down, okay? And that's what's happening with the dollar index. If you trade in the euro dollar, you need to be very good in keeping your eyes to the dollar index, okay? Because the dollar index will be a very, very, very good correlation, or will create a very good correlation between the two. And so you want to do that and keep your eyes on it so that you know how and where price is. Okay. Now let's go back into our tools, and we are about to finish, but I'm going to confirm my thinking. Why? Right now, I made this analysis only on price action and supply and demand, okay, and the structure of the market. That's it. If I was, which by the way, I am going to take this trade. I'm not going to say if I, but this is a trade I'm planning to take myself. And now look at that, 659 pips. And look at the amount of 659 pips in our risk. It's going to be somewhere around 100 pips. Okay, somewhere around 100 pips. So you need to calculate if 100 pips are too expensive for you. You need to calculate what's going to be your lot size so that you can afford the 100 pips stop loss. Let's see. Let me add Ichimoku, and let me add this. Well, I don't want to teach you about the volume profile per session because I'll confuse you. So let me add volume profile on the range, which is what we've been reading. This is a lot easier. Okay. So look what's happening. Price, we did got a TK crossover here. And price is going up. However, look at the angulation of our Kijinsen. It's beginning to be flat. The angulation of the Kumo, and look how small, let me go down here. Look how tiny and narrow you see the Kumo forming. That indicates that it's about to do a Kumo twist. This has been coming down from this downtrend, and typically it forms a twist, and then it continue if it's going to continue on a drop. Then at that point, what I will wait as a confirmation, as you can see here, there are heavy sellers in this area, but there are going to be a little bit more buyers here, and it's just a matter of time when it gets below the 52-week where there is not going to be much action going on. But judging by the look of the Ichimoku, we already broke outside this Kumo cloud just today, but we are getting way too far from our Kijinsen. Now, to the benefit of this trade and the doubt, this price can come down to here, and then it can rally all the way back up. And what's not helping right now this price to drop is this. We certainly have a very weak compared to the euro dollar. Okay, we have a very weak dollar compared to the euro. So the euro is winning this race much stronger than the dollar. And for that reason, the price is gravitating in favor to the euro. And price is just going up. So what we have to do, guys, what's next with this trade? Well, like everything else, a disciplined trader, anything else with trading, a disciplined trader is one who knows how to wait. We don't rush and we don't take trades just because. We take our time because we rather have 10 trades, 7 trades a month and have them profitable than a bunch of trades that are not good trades because we didn't have patience. And just to give you an example, and with this I finish. Trader A. Let's see if I can do this. And trader B. Okay. Put this down here so you guys can see it. All right. There are two types of traders: the disciplined trader and the one who's rushing, and the one who doesn't think and has proper money management. And money. Okay. And see here, the trader B. Okay. The trader B is the disciplined trader. I'm just going to do a real quick example. This guy takes one trade and he goes and he puts one lot and he trades and he makes, let's just say, $80. Then he takes the second trade and he puts 0.5 and he makes here $50. And on the third trade, he feels comfortable now because he has two winning trades, and he goes and he puts another lot, right? And he wins again. So now this trader, he feels, let's just put he wins $100. This trader now feels that, oh, I can do this. And this happens all the time, guys. And he says, you know what? I'm going to be rich. And I'm going to make as much money as I can. And now he goes 2.5 lots. And he loses. He's now in the negative. He lost this trade. And he loses 180. Then on the fifth trade, now he gets scared. Now he only trades 0.1 and he makes $10. Okay, and one more trade just to finish with this example, and then I'll explain what I'm trying to say. And he goes and he says, let me try one more lot. And this time he goes in the red because he starts losing, but then he panics and he gets out of the market. And this time he is in the negative $30. Okay. Now, trader B is a consistent POC trader. Okay. It's you guys. This represents you guys. And his first trade, he only trades based on the market structure. So I'm going to put MS, and he used ATR. Okay. So he can calculate his number of lot sizes. But he understands he's not going to risk no more than 2%. So he always takes the same type of trades. And that means that he might only trade half. And by half a lot, probably made on the very first, on this same trade that this guy made $80, he only made $30 or $40, which is half. Oops. But then here on the second trade, he trades how much? Same number. And now he made $25. Look how this math works. On the third trade, he didn't go on one lot. He stayed with his half. And this time he made $50. So far, the other guy, it's making, on this first trade, this guy thinks he's making more money because he made 80, he made 50, now 100, while this guy only is in 40, 25, and 50. But on the fourth trade, he does the same thing. He's a disciplined trader. He's not playing around, and he is just simply trading with a disciplined mind. And he also lose that trade, but instead of losing 180, his lost right here will be 60. Nope, it will be actually 30. Okay. Then on the next one, look at this. This guy only did 0.1, and he's a disciplined trader, so he's going to do 0.5 again. So instead of winning $10 like this guy did, he won $50. And then here he lost 30. And we're going to do the math in a second. We're going to see who ended up with more money at the end of the month or at the end of the week, if this was a week of trades. And this guy lost $30 and he only risked 0.5. So his loss was $5. Okay. So if we do the math, let me see here. Okay. We have this guy that first time he made $80 plus 50 plus 100 minus 180 plus 10 minus 30. All that excitement, and he finished the week with a positive $30. Okay, profit. Profit. Now, the POC trader, you guys, let's do this again. I'm trying to give you guys a bunch of stuff, and this is the first time for the POC webinar in which I talk a little bit on money management, but this is important. $40 plus $25 plus $50 minus 30 plus $50 minus 5. Look at the difference. It's huge. It's huge percentage-wise. He ended up the week with $130 profit. Who do you rather be? And believe it or not, this happens all the time. And this is the reason why people lose money. They're not disciplined. They don't set and they don't manage their money properly with a consistent strategy. And they end up always losing more than what they make. So always risk, let me put it in capital, no more than 2% of your capital. And I want to put it again, always. If you want to be in this game for the long term, don't change this, but always trade risking no more than 2%. So 2%, if you have a $2,000 account, if you have $1,000, let me round it up and make it easy. $1,000, we know that 10% is 100, and then at that point we know what we have as our 2% would be what? What is it, Ruben?
$20.
$20. So think about it. You might feel as a trader, if you have $1,000 on your account, oh, but I can lose $20. That's nothing. You know, I'm not gonna do 2%. I'm gonna do 5% because and then you start playing with your lot sizes and you start taking all kinds of crazy risk. And then you take a loss of $40 and then another loss of $30 and then you win 50, but then you lose again 60. At the end of the month, this is your profit versus this. Okay, so keep a consistent, clear management on your money, your lot positions, and you will be just fine. Any questions, Ruben? I'm ready to finish, but do you have any questions in regards to what we went through or the money management or anything?
No, I'm fine. I'm really good. Everything was really clear.
Outstanding, my friend. Well, thank you very much, guys. We're going to call it for today. And I'm looking forward for next week. If you want to continue on this journey, we have a Facebook group in which we shared, and it's free. We shared charts and we shared information for educational purposes. And you are more than welcome to join us there. If you want to really take your trading to the next level, I do provide a coaching, and we can sit and spend time together. And by the way, this is not financial advising. This is educational purpose only. And so I will be more than happy to share education with you on how to use the software to make money trading the markets. Okay. So have a good night. Have a great week. And I wish you guys a very profitable and successful week.
Thank you.